Should you hire a robot for your financial advisor? I'm Jack Otter, editor of BARRON'S.com. I'm here with Tricia Rothschild, who is head of Global Advisor Solutions at Morningstar. We're at your wonderful convention you hold every year. You had a panel on robo-advisors, which suddenly have come to the fore. They were kind of in the background, and then some big companies, Schwab, Vanguard, kind of entered the space, and that gave it credibility, if you will. But can you just give us an overview? What are these things, or the software? Why would people be interested?
Sure. It's a huge trend and getting a lot of press, as you said. And we see it at Morningstar really as an evolution, not a revolution. Ultimately, I think it shows that more power and more choice is coming into the hands of the individual investor, which ultimately is a really good thing. If you think about 30 years ago with the advent of mutual funds, all of a sudden people who used to be super well off and could access, accounts at Goldman Sachs, that moved a little bit more downstream to Main Street with the advent of mutual funds. And I think robo-advice is a continuation of that.
So briefly, for 1/4 of a percentage point, 1/2 of a percentage point, one can get a fully formed portfolio of usually low-cost ETFs and be fully diversified, the kind of plan that an advisor would have produced for you in the past.
Sure. Yeah, I mean, a robo-advice doesn't replace a relationship with a human being, let's just be clear. But it is facilitating access to low-cost strategies for people who otherwise maybe wouldn't know how to access them, wouldn't think that they had enough money, would be intimidated. I mean, half of it is just, honestly, I think the digital experience. And having a way to, with a couple of clicks or maybe a couple of enticing images that help you think about your future goals, get you engaged in the investment process, which is really helpful.
Some young people, of course, they're doing everything on their iPhone, from buying a car to listening to music to having a social life. And so in a way, I could see sort of a certain crew being more comfortable doing it this way than looking for an advisor who they might see as a sales guy.
Sure, and I do think that the best advisors are really looking after the whole relationship and not, positioning themselves as salespeople. And I think the entire investment industry has moved in that direction also, as more advisors are moving more toward fee-based asset management.
So we should point out that for a good human financial advisor, putting together a portfolio is actually only a small part of what they do. It's crucial. You need to have a well-diversified portfolio that's appropriate for you. But one former financial advisor, who's a friend of mine, she said the best service she ever performed for her clients was to act as a shrink. In the 90s, she was telling people, calm down, don't put your house on mortgage just to invest more in the stock market. And in bad times, she tried to talk people off the ledge.
You can think of it a bit like a fitness regimen, right? I mean, you can wear your Fitbit, you can count your steps, you can do all sorts of good things, but at night when you're alone and you're tired or whatever, you might binge on the cookies, right? So sometimes having a trainer or a coach or another person in your life that you're talking to about those choices and is going to kind of hold you accountable.
And of course, there are things in your life that maybe software can't figure out, whether it's from your emotional state to your overweight in company stock because you have a lot of options, to your parents' longevity. I mean, there are all sorts of issues that a good advisor would get into, right?
Correct. We at Morningstar tend to think about a concept called the total wealth approach, where your investable portfolio, the stocks and bonds and cash that you hold, is a portion of your overall wealth.
Can you talk about a couple of the other elements of wealth besides the obvious portfolio?
Yes, definitely. So what a lot of people don't necessarily think about maybe as obviously or as often is, first of all, their human capital. So that diminishes as you age. Another would be Social Security or other pension-related benefits. A third element of total wealth would be real estate assets. Focusing only on the investment portfolio, which understandably is very tempting, is not necessarily reflective of what you really need in order to meet your ultimate goals and the trade-offs you might make along the way. So focusing on the total wealth and having maybe an advisor or a coach who's helping you see that bigger picture, I think can lead to better investment outcomes for many people.
Thanks very much, Trish.
Sure, thank you.